hit last week, but we'll keep our eyes on what's happening with the dollar as well. We'll bring that board up for you in this discussion. But let's get more. Joining us now is Emily Sanders, CEO of Sanders Financial Management, and in Singapore, Leslie Fang, Head of Investments at Schroders Private Clients. Good to see you both. Emily, if I kick off with you. Banks here today in Europe, I mean, on a real tear, but is this anything more than a catch up with the US, or can we draw a line in the sand? You know, JP Morgan are buying bear for more, and therefore we reevaluate what banks are worth?
Well, Ross, I wouldn't get overly enthusiastic about the bounce in the U.S. yesterday because we still expect a fourth leg down. And what's happened with the banks was great because they were just so oversold. But we do expect actually another European bank, as yet unknown, to go through a Bear Stearns kind of story.
You mean to actually have to be taken out, or another bank to be bailed out here in Europe?
Yes, in addition to Northern Rock, perhaps not a government bailout, but some kind of a sacrificial lamb so that the market can finally reach its climactic bottom and start moving up again in the second half.
Leslie, let me ask you this question. When you see Hong Kong today, big standout up more than 6%. When you see a market like that up more than 1,000 points, I mean, you start to question, right? I mean, you don't get the sort of rally in a bull market, do you?
Well, there are two parts to it. The first part to it is that yesterday was a holiday in Hong Kong. So obviously today they're just playing catch up of 2 days worth of gains. If you look at markets like in Singapore, which was up, what, 3% yesterday and up a lot today. So you get them you get roughly somewhere around there. So I think, but then again, volatility is a game of the day right now, and it is not surprising to see this kind. There's a lot of bullish sentiment, and then there's also this thing that Hong Kong basically at the end of the day represents, the whole crust of growth in Asia together with China, and especially with the cross-strait ties with Taiwan, the whole Greater China region. There's a lot of optimism that's still built into the market, but more importantly, it is beginning to starting to look cheap. So there are a lot of bargain hunting that's going in, but then of course, we should be looking at this opportunity to buy on dips, not really to hold, for the long haul. Okay. But if I were you, I would be looking to sell if there's any significant rally.
Okay, what do you make of this report by S&P that says defaults may rise for Asian corporates simply because interest rates are going up, funding costs are going to go up? How problematic is this going to be for Asian companies?
I think this is going to be a rather serious problem. There's two parts to it. At the end of the day, we call China one big inflation, pressure cooker here. And there's two parts to it. The first part of it is in terms of consumer, CPI, individuals. That's going to translate into negative wage growth. The second part of it is PPI, which is a producer price index, which translates into much higher costs. So what's going to happen is that the funding cost has increased, the production cost has also increased, and collectively that's going to make the cost part of the whole equation significantly higher. So you have top line, which is revenue, minus pretty much the cost, and then you got the bottom line, which is profit. And profit is going to come down eventually, and that's going to be a problem. And hence the reason why S&P is actually forecasting increased defaults. That's going to be likely. Not yet, but likely in the horizon.
Emily, Brian Shackman here. I was fascinated by the Fed's last move because everyone expected a full basis point. They come with 3/4, which if you look at it objectively is still huge, but yet they subtly sort of prop up the dollar a little bit. I saw in your notes that you think that inflation in the U.S. might ratchet up a notch once the recession eases, but a lot of people, especially with the Fed, say they see it moderating. So what do you see?
Well, I see inflation as a threat after the recession eases, and currency is really the big story, because if the Fed had cut 100 basis points, which fortunately they didn't, it would have just continued the slide of a weakening dollar, and the dollar is in a secular decline. So, for example, right now it makes up 2/3 of the world's reserve currencies. However, that is gradually shifting toward the euro, which makes up 1/4 of the world's reserve currencies. And by 2018, we forecast that the euro will overtake the dollar as the world's reserve currency, with the yuan close behind. So really, the weakening dollar is hurting the prestige of the United States. It's not bringing it down as the world's leading economy, but over time, the Fed has to be very careful not to go totally contrary to what Secretary Paulson's scripted remarks continue to say, strong dollar policy, while taking a completely contrary action to the words.
Well, I'll put it to Leslie then, because there's a lot of U.S. dollars in reserves in Asia. I mean, What would that do if there was a bit of a shift away from the U.S. dollar in terms of reserves? I mean, Asian economies are trying to use those U.S. dollars right now. What's your take on what Emily just said in terms of a shift possibly in reserves?
Well, what we are seeing actually is that the shift has already started happening. If we actually take a look at what BOJ is holding in terms of reserves, it has actually grown significantly greater, far exceeding what would have been possible if it's just holding US dollar. So we're actually speculating that the BOJ is holding an increased amount of euro, and certainly, even from a private banking standpoint, we are seeing a lot of increased demand for products to be denominated in euro, in sterling, in Aussie, in almost anything other than the US dollar. What we did call for, earlier in the show is that we are saying that cash is king in any color except green. So yes, we are seeing a very tactical rebound of the US dollar, but structurally, it is actually a shift that's going towards euro, towards sterling, and towards all other currencies. The other thing also is that we got to be cognizant is that there's a funding cost to hold US dollar. This is especially true with regards to China, with regards to the fact that a lot of it is actually packed in terms of US dollar, and that they're actually facing an increased funding cost. So what needs to happen is that they need to diversify the sovereign wealth fund away from the US dollar into the euros and the likes. And this is going to be a theme that's going to be prevalent not only in the months ahead, but in the years ahead. While we do not know when the shift is going to happen, but what we do know is that, example, like in the case of Europe, the GDP, in terms of GDP terms, Europe has actually overtaken the US when the euro is around 156 region. So we're going to be, we're going to be quite cognizant of that.
And Emily, Leslie talked there about the technical rebound we got on the dollar in the last couple of trading sessions, and we saw the fall off in gold, $100 there, and oil coming back as well. What is your outlook for short term for those commodity plays in light of what's happening with the dollar?
Well, since so many commodities, Ross, are denominated in dollars, it's not surprising that with this short-term technical dollar stability, commodities are falling back. Plus, they were on a parabolic rise, which is just unsustainable. But actually, long-term, and following up on Leslie's comment about GDP, we see that there's a future for a dollar economic union, perhaps with the U.S. dollar and the Canadian dollar, which seems very far-fetched right now. But if the euro continues its strength the way it has, the dollar will certainly have to shore itself up.
Yeah, hard to believe, though, with the rhetoric we've had so far on the presidential campaign, though.
Well, you never know.
Leslie, do you agree with what Emily just said? I mean, I know in terms of commodities, you've been loading up on this particular sector. Tell me honestly, were you hammered by the sell-off last week, and what are you doing about your position now?
Yes, to be honest, we were hammered by the sell-off because we were very heavy in agriculture and we were very heavy in gold. Gold, obviously, you can look at it from a commodity perspective or look at it from a currency perspective. So overall, year to date, I think our portfolio is roughly around flat. But then again, we are seeing a rebound in gold, very encouraging, back up to the 930s. We are seeing a very strong rebound in agriculture, which is where we are positioned. So if you take a long enough time horizon, that should prove to be a negative correlation and a diversification. So we are in it for the long haul, and I think it's going to come back.
Okay, the key word is long haul, right?
Long haul. But I don't think this long haul is going to be too long.
Okay. We'll have to leave it at. Leslie, thank you very much for being with us. Good talking to you. Leslie Fang, Head of Investments at Schroders Private Clients. And Emily, thank you very much as well. Emily Sanders, CEO, Sanders Financial Management. Brian.